earlier in the program, right at the start, we looked at the Dow, and I showed you the Dow 30, and then the market, which had been to the good, then turned turtle and went down under at 12 o'clock. And since then, throughout the afternoon, even though the low point of the day was off as much as 77 points, which gives it a point swing of around 142 points, what you're seeing there, of course, is, I do believe the market has now just ticked up positive, or it's bouncing around there, as you can see from the current numbers. Now, the market at 12 was deflated by reports that President Trump is getting ready to escalate the trade war with China. He wants to proceed with tariffs on another $200 billion worth of goods, according to one source. The timing is not clear, if and when. Meanwhile, Wall Street executives meeting in China this weekend, where sources say Beijing wants trade talks help. Craig Allen is the president of the US-China Business Council. He joins me from Washington. It must be like being hit over the head with a wet cloth when you see the president once again make comments that he's looking to put the extra $200 billion worth of tariffs on China, and the market falls over.
Well, thank you for having me on. I appreciate it very much. The president has stated this several times, and we have $50 billion of tariffs in place right now. We are hopeful that the president will hold his hand, particularly as we are entering the holiday season, and there's so many hundreds of thousands of containers on the water right now. So now would not be a good time for additional tariffs. We also understand that there are new trade talks along the way, that Treasury Secretary Mnuchin has invited Rioja for trade talks. And so there are some conflicting signals here. We are hoping that additional tariffs will be put off.
Right, but we're not just talking about 200 billion, are we? Because he's also threatened at 254 billion. And only last week he said, well, even more than that will make it 500. Effectively, the president seems to want to tariff every aspect, every dollar value's worth of imports to the United States.
Well, certainly the president has threatened tariffs over virtually all of China's exports to the U.S. But currently, we're at about 10% of that, at about $50 billion. That has already done significant damage to the U.S. economy, to U.S. importers, and also due to Chinese retaliation to U.S. exporters. And thus, we're hopeful that negotiations will take place and that our diplomats will be able to resolve the very real issues on the table associated with intellectual property rights, forced technology transfer, overcapacity in China. Those are the real issues that need to be resolved.
Right,
and please.
Is anybody listening to you, do you think? I don't mean that disrespectfully, obviously. I mean, you know, is the administration, because if what we read in Fear, the book by Bob Woodward, is anything to go by, there are many people in the administration who would absolutely agree with you and say 100% these tariffs are a bad idea, it's going to harm trade, we'll all lose. But the president seems hell-bent on wanting to make his point.
Well, Richard, about 2.6 million American jobs rely on China trade. That's an awful lot of jobs. We have 4,000 American companies registered in Shanghai alone. So the trade between these two great countries is enormous. Our economies are very much intertwined. Tariffs do a great deal of damage. And thus, we're hopeful that our diplomats and our negotiators will be able to find a way out of this thicket by addressing the very real problems in China. A deal could be done. The two presidents will meet in Argentina in November at the G20, and we're hopeful that the negotiations that we anticipate happening in September will set the groundwork for the two presidents to have fruitful discussions that will lead to good results for American companies,
right,
for American workers.
Sir, thank you for joining us. We much appreciate it.
Thank you.
Well, in fact, let's talk more about it in the future. Now, flurry of Chinese IPOs this week. Mnuchin raised $4 billion. NEO shares soared as much as 92%. They're priced at the bottom of the range. But really, if you want to talk about IPOs and perhaps mispricing, Shitutao soared on the first day of trading. The stock launched at 7, it's gone up 9, so a gain of 128%. when I spoke to the chief financial officer a short time ago, it was at the NASDAQ, the market was up 152%. This is highly unusual in an IPO, by the way. You'd like a nice small bump of maybe 10 or 15%. But to have a stock go from 7 up to 17, and even if it's just fall back a bit, it begs the question if the IPO was incorrectly priced too cautiously at the lower end.
In the past 2 months, I agree, the overall US market is quite stable. But if you look at the Chinese stocks, right, the guys like Alibaba, Weibo, Baidu, right, they have all been down, they have all down quite a bit. And the general sentiment, given this Sino-US trade war, right, is not very positive on the Chinese side. So I guess from the roadshow, our impression was that all the investors are very cautious about another Chinese IPO. So we did feel that pressure. And today, to be honest, I'm not sure if the current trading is totally irrational. Although we believe $7 is an understatement, but I'm not sure if the current price is right either.
Okay, good. All right. It is what it is. And over the next period of time, we'll see where it goes.
Exactly.
On this question of Chinese IPOs, the rush to the market by Chinese companies, why did you decide you wanted to list in New York? I mean, there's other places, I mean, obviously you are listed elsewhere, but there's other places you could have listed. Why are so many Chinese companies IPOing either on the NASDAQ or the NYSE?
Yeah, for someone like me, I was in banking for 6 years, and then I led 2 companies to become public in the US. I think actually it's pretty clear to me that the US capital market, the whole system, the whole design, the SEC, the exchanges, are still the most efficient system in the world. It is a lot more market-driven than the Chinese market, and also a lot more efficient than the Hong Kong market. And coming back to my company, right, we are internet media business. And actually, most of the internet media businesses in China are listed here, actually. Think about Hong Kong. Other than Tencent, I can't even think of one sizable internet media company in Hong Kong. So clearly the investor base here understand the business the best, right? So that's why we decided to come here.